There are some voices that compare the current situation with the pre-crash of the dot-com bubble. Do you think it's comparable?
There was a substantial growth and substantial upside to the market in the late 90s and in early 2000s. And are we seeing a hint of that right now? Probably a little bit. I can understand the comparisons to the two time frames.
Antes de ver el vídeo al completo, recuerda darle a like, suscríbete a mi canal si te gusta este contenido y déjame tu comentario, que lo estoy esperando. Bueno, pues aquí estamos con una nueva gama de entrevistas internacionales y en esta ocasión tenemos a Dave Graichen, que es responsable de Capital Markets de WisdomTree. Thank you very much, Gabe, to be with me here and to talk related with the stock markets and the US economy. And it's a pleasure to having you here. So thank you very much, first of all.
Thank you. Pleasure to join you today, Hector.
Okay, so related with stock markets and the current situation in financial system, are you positive on the markets for the remainder of the year? And can we continue to see more upside in equities and other asset classes? What's your point of view?
So I think when we look at the markets in general, I think they're a little maybe overstretched at the moment. We've seen a tremendous run in the last 3 months. The markets have seen substantial gains. And when we take a look back at some of the commodity prices, the rise in gold, which is historically a defensive play, and the driving force of the tech stocks, the big seven, we've seen a huge run up in pricing, as well as when we look at Bitcoin on the cryptocurrency side. So I think we're probably a little stretched. We've seen a lot of analysts across the street of Wall Street upping their year-end targets. A lot of them are already there right now, so it's hard for me to believe that we have a tremendous amount of room to go on the upside.
Mm-hmm. You mentioned some assets as Bitcoin, gold, which are explode this year. Are you feel positive with these assets if you look the flows into these kind of assets this year? Are absolutely massive. Do you think it could be coming more upside in these assets as gold or Bitcoin?
I do. If we think about Bitcoin, we recently launched a Bitcoin fund. We were one of the firms that were new to market. We've seen incredible growth in the space. Our ticker BTCW has I think we opened traded as low as 42 and now is trading around $76 a share. So we've seen a really nice return in the Bitcoin market. There's been a lot of early entry into the space, and we continue to see lots of creations and a lot of people adding to positions over the last couple of months, and I would anticipate that were to continue.
This year in 2024 are discounting maybe 3 or 4 cuts interest rates in the US. And I want to ask you about how will this affect to the stock markets and other markets in your opinion?
But I think what we've seen in the market thus far this year, and even into last year, when you talk about the number of cuts anticipated, I think last year at one point we were talking 5 or 6 cuts, and now we're talking 2 to 3 cuts. So I think a lot of that already might be priced into the US equity market. But time will see, and I think the economy is doing well right now. So if we see any pressures on it, we'll probably see a pullback in equities. But we're still on the 3-cut cycle.
Mm-hmm. There are some voices that compare the current situation with the pre-crash of the dot-com bubble. Do you think it's comparable, or are disagree with these voices?
It's interesting. I started my career just prior to the dot-com bubble, and there was a substantial growth and substantial upside to the market in the late 90s and in early 2000s. And are we seeing a hint of that right now? Probably a little bit. I can understand the comparisons to the two time frames, but I think the market today structurally is much different than it was in the early 2000s, and I would hope to think there's more stability in the market, and that there's still we're not too overdone on the buy side.
So do you think there is a component that we are some kind of fear of missing out in the S&P 500 and other indexes in
We
the
are.
stock
I mean,
markets?
if you look at the way that even structurally, the way people communicate today, with social media and, news isn't on at 11 o'clock at night anymore. It's 24/7, and people see stories, and they like to be involved, and they do fear of missing on situations. And that's what you see sometimes in situations like the Bitcoin run up, and you've seen it in some of the tech stocks, and they just keep driving up because people, maybe hear the story a little late, and they don't want to be late to the game, and people are piling in.
And this year we have U.S. elections, and if we look to the past, the elections could affect to the equities. So, are you feel any concern about this event this year, or it's not important for you in order to make a
I think
strategy?
anytime you have an election year, an election cycle, there are certain things you want to take a look at as far as, what's been working while a certain president's in office, and what are the policies of maybe, the next in line person that's going to be elected. We've been very fortunate. We've had a very strong economy in the last, 18 months or so. I think the market has shown it. And you probably see some changes if Trump gets elected. But he's been more business friendly than maybe Biden's camp has been. So, I think either way, I think the market's still, on steady footing, and we'll see, a very orderly transition if it occurs.
Mm-hmm. And which sectors do you think could lead the market for the rest of the year? What's your point about it?
So from a sector front, we've seen obviously the large cap mega tech growth has been doing tremendously well in the last year and a half, and we would continue to see and expect the large cap space to perform well. I personally would be more on a little bit of defensive side. I would choose more quality names with earnings and dividends, something you can look to, and probably would stand to outperform in the years to come.
Mm-hmm. I want to ask you about another asset class, which is fixed income. It's an asset class that many analysts talk about it this year. So, do you think it is a positive environment for fixed income? Many investors have doubts about duration, but I want to ask you about your opinion.
Right. So we have a product here at WisdomTree called USFR. It's our short-term treasury fund that is our largest fund. It's a collective of 4 short-term treasuries. The return's been outstanding, about 5.5%, and we continue to believe that story will resonate. We do not think that going further out on the kind of on the curve probably at this point makes a ton of sense. So we're very happy with our positioning in our product line moving forward.
Mm-hmm. What are detecting for WisdomTree flows? Are you detecting more interest in large caps, in tech stocks, with your ETFs? What are the main trends that you detect in WisdomTree?
Yeah. We've seen some very, very nice flows in certain sectors as far as quality sectors go. And if you want to look more globally, we've seen a tremendous amount of interest in India, as well as Japan. We have 2 funds that have performed phenomenally well, EPI and DXJ. We've seen tremendous amount of adds to those funds in the last year or so. And I think people are looking for regions where they can feel comfortable making the investment, and the growth is there, and thus far in the last year to 18 months, that's been India and Japan.
Mm-hmm. And precisely talking about another regions, I want to ask you about what's your point or your strategy related with another countries? Are you positive in China, in India, in Europe? What's your strategy related with these countries, emerging markets, developed markets?
So again, we have two different strategies. We have EPI, which is our Indian strategy. Again, we look at quality companies, quality growth, and those seem to really be driving flows. On Japan, we have a product called DXJ. It's a hedged version. So what does that mean? We strip out the component on the FX side, and you gain a nice carry just by being in the trade, long US dollar and short the yen. So there's about 6% carry there right now. So we've seen again, at WisdomTree, we focus on quality and growth and value. So we're really looking for those companies and those funds to continue to perform.
Just the last question. I don't talk about the risks, and I want to ask you about the risk. What potential risks may appear this year on the road? Maybe another problem with the banks, or what is your main concern related with the stock markets and the financial markets? What's your main concern?
So I think my main concern this year would be more on the macro level. Is there something out there, globally, as far as conflicts in the Middle East that could perk up? Any questions regarding Russia? So there's a number of global macro situations out there that we're certainly keeping an eye on, and that would be my biggest concern right now.
So Dave Graichen, thank you very much to share your time with me here in my channel. So it has been a pleasure, as I said before. Thank you very much again.
Hey, thanks, Hector. I appreciate it. You have a great day.
Thank you.